Yesterday, the euro and the British pound gained strong upside momentum in early trade on Thursday. The European currency was supported by the news that Germany's inflation increased by 1% in January compared to the previous month, above market expectations of 0.8%. The Bank of England inflation report hearings drove up the pound sterling. However, the US session led to a shift in market sentiment. Demand for the dollar recovered. Data on US jobless claims increased but didn't surprise investors, given that the Fed officials stressed the need to keep raising interest rates. The market remained balanced. No one is in a hurry to buy risky assets. Before we get into technical analysis, let's consider today's macroeconomic calendar. It is full of crucial releases from the UK, including data on GDP. Britain's economy is forecast to grow by 0.4% year-on-year in the fourth quarter compared to the previous 1.9%. Quarter-on-quarter GDP growth is anticipated to remain unchanged after a 0.3% contraction. In monthly terms, gross domestic product is estimated to have fallen by 0.3% in December 2022, easing from an increase of 0.1% in November. If the readings are even worse than analysts' forecasts, the British currency will come under pressure, trimming yesterday's gains. Traders may also take notice of UK industrial production. However, this report is unlikely to have a severe impact on market sentiment. In addition, it is worth paying attention to the University of Michigan's Consumer Sentiment and Consumer Expectations indices. If the indicators increase, the US dollar will gain value against the euro and the pound sterling by the end of the week. So one cannot claim that the dollar's bull run is over. Bears will most likely continue dragging the euro-dollar pair down. And now let's take a look at the 1-hour euro-American dollar chart. I believe it is worth focusing on 1.0706 acting as intermediate support and the level of 1.0671. Long positions can be considered amid a false breakout at 1.0706 or on a rebound at 1.0671 to catch an intraday correction of 25-30 pips. If the price breaks through 1.0706, the euro will most likely post steep losses. Alternatively, if bulls take control of 1.0706, a strong buy signal will be generated. Thus, the euro will head towards 1.0747. A false breakout at this level will create a sell signal. If the price fixes below 1.0706 and tests it from the bottom up, the volume of short positions will increase further. If bearish trading activity turns out to be subdued following a breakout of 1.0747, it would be a wise decision to wait for the price to reach 1.0785 and then go short on a rebound, counting on a decline of 30-35 pips. Speaking of the British pound, yesterday the currency entered a significant upward correction but then retreated from 1.2187 amid a strong sell signal. As a result, the pound-dollar pair slid by about 80 pips. Currently, the pound sterling is trading below 1.2124. If data on Britain's economic output is upbeat, a false breakout at 1.2124 will create a sell signal. In this case, the British currency will dive to 1.2060 and probably 1.2011. Where I recommend going long on a rebound. If statistics prove to be gloomy, the pair will decline to 1.2060. A false breakout at 1.2060 will make it possible to open long positions with a view to return and consolidation above the 1.2124 level. Its top-down test will create an additional buy signal. Thus, the British pound will have a chance of recovering to 1.2186. At this mark, traders may go short, trying to catch an intraday correction of 35-40 pips. Good luck and have a great weekend.